We're in a strong bullish market. Why is everyone not ready to show up? Get ready to put some trades on here. This is perfect. Pullback coming after a higher high. A lot of things on my watch list setting up. I can tell you that. This is in line with my expectations. So let's talk about it. Trading for a while, teaching for a while. Ooh, still haven't saved that slide with my updates. Just peachy. Bob's feeling peachy. Good. Everyone else, let me know. Here's the disclosures. As always, make sure that the lawyers are happy. And let's get into it. Let's start here. Let's start with Yahoo Finance. We sold off a little and we just sort of hung out sideways. The Fed announced and we're like, oh, good. And then we're like, oh, wait, no, that's not good. VIX hedge working nicely. You are smart. Getting hedges signaled by something like the hedge or something like the VIX. Phenomenal. Amazing idea. Love it. I might steal it. The Dow was sideways, hovering around break even, or around break even, flat. Fed pops it, then drops it down 0.5%. NASDAQ just the whole time down 2%. Google earnings not good, not perceived well. The Russell, amazingly, in the rally, it tempers. Of course, it holds rates steady. We knew that. It tempers expectations on cuts. Yeah. I mean, that makes sense, right? Anyone who's like, we're going to drop 2.5%, that's madness. 1%, 4 cuts in the next 7 meetings. Okay. I don't know. Obviously they don't come out and say that specifically, but stocks fall after tech bust. That's Google primarily. You think my Russell is broken? Oh, maybe I need to know positively. Is this the index? This is the RUT. All right. Let's test it out. Let's go RUT. RUT. Yeah, I agree with you. 1.7%. Yeah, it's wrong even from the Russell, but you're right. 1 point. I was like, that doesn't sound right. That doesn't seem right. Yeah, no, it's not right. Volume increase on the Russell. Let's just dive into the SPY. What's happening on the SPY? Yeah, it looks like it's going to be volume up. So I assess volume on a 30-day rotational schedule. This is going to fall off. And I'm like, oh, all I have is we've got 50 minutes. Average is 75. We're at 64. That's gonna temper the markets a little bit. Not only a little bit though. For me, only a little bit. This whole area through here is representative of areas that I think, wow, if I find support through here. So if tomorrow we have a hammer or an inverted hammer or something like that, and then the next day we start to bounce, what do I think? I think we found a higher low. It's a new support level. Right? So, yeah, I think the time to hedge was already here, and now you're kind of looking at it a little bit. None of this is concerning to me. Volume, a little bit. And then the next day, tomorrow, we get another big down day. And the volume, right? We're going to assume volume like this, above average. And then we get another one or even an acceleration. Then at that point, posture right now is a 6. My posture is a 6. If anyone is curious what that looks like, let me give you a little look-see. You can see here that I actually increased my long-term score a little bit Short term stayed the same. Volume increased another 1/4 point. Major market with the NASDAQ, or excuse me, with the Russell looking a little stronger, increased. This stayed the same. That's where I'm at. Okay. Yeah. What else? What else? Let's go look at. Nope. The other news. So on our economic calendar, what have we had happen this week? Job openings came back better than expected. Consumer confidence, I would say as expected. It was 0.2 lower, but that was a big jump. So Tuesday's data came back very strong. Home index, price index for homes, not as much as expected, but better than prior and positive. So good enough. Job openings, better than expected, good enough. Consumer confidence. ADP this morning came back a little light. Didn't really impact. I think the impact we had this morning for the futures was Google. Google's earnings were down. It sucked the NASDAQ. It sucked everything else. ADP was a little light. We've had nothing but positive surprises. It's still 107. I would need to see another month before I'm like, oh, well, it's starting to slow down. Jobless claims, low 200s is what we're expecting tomorrow, and we'll see if we get that or not. But essentially, as of right now, the Fed left rates unchanged as expected. They signaled that they're done, but they, reminded the market not to get too ahead of itself in regards to expectations for cuts. I said it the second we caught wind. Now that we saw the Fed. So we had the Fed meeting. So, 100%. Let's see March now. Yeah, that's tempering expectations. So this morning, all of a sudden this morning, it was opposite of this. 55 for a cut, 45 leave it unchanged in March. Now you can see we're almost 60-40, leave it unchanged. So the probability has been fluctuating around 1-to-1 back and forth between unchanged and cut. Now we're a little bit more favoring unchanged. Okay. Market will adjust to that. That would give us a more sustainable bull market, and it would also open the door. Correct me if I'm wrong. When was the last time we had a good Fed surprise? I don't think Bernanke. Is that it? That's all we've had, right? Since Bernanke after Greenspan, then we had Yellen. Now Powell. Tell me if I'm missing anybody. I think that's right. Highly unlikely. March cut was one of the questions asked by the press. Bob said, he said highly unlikely. Ooh, so highly unlikely to me is less than 60%. So there's people with a little bit of hope, but I'm of the kick it to Q2. That's fine. Let it really make sure. Then you hit it once and then you see what happens. Greenspan lasted quite a long time for sure. But no one has surprises where they're like, you know what, we're gonna hit it. We're gonna go. And the market's like, what? Hooray. I think that's unlikely. The Fed has, for some reason, connected to the market. And I feel like that makes for worse policy. I don't know. We'll see. We'll see. When we get to May, now we really start to see a shift. But even in the May, oh, look at that. Even in May. No, I'm like, wait a second. That can't be right. So in May, definitely the odds are 10-to-1 that we have at least 1/4 point. And actually, we have better odds that we see a 1/2 point than no cut at all by the time we get to May. So there you go. There you go. Economically, what else do we have? Tomorrow, jobless claims. That's the big one, really. Not much from productivity. Productivity is supposed to drop. I don't look at that much. I'm going to look into that indicator a little more, see if I can understand it better. Personal growth as a trader. Then Friday, we're expecting Department of Labor non-farm payrolls, 185, down 30,000 from last month, but last month was a positive surprise. Expecting possibly unemployment to go up a tick from 3.7 to 3.8. Bob said, I said June 4 months ago. I've been saying, you said June. I've been saying May. May for me. First chance in Q2. I'm a May guy. June makes fine sense to me as well. I think it's more sustainable. Really make sure the inflation's done. Okay, let's see what Stella thinks about what's going on. Stella agrees with my 6 that we're thinking this is a consolidation, higher low bullish kick. As this window opens, it can be 2 days, 5 days. Yeah, this is be ready. Be ready, Freddie. Let's go to the QQQ. Okay, so a little bit more concern in the NASDAQ saying maybe it tries to kick, but it won't have the strength. If it tries to kick, I'm trading it. If it tries to kick, I'm expecting that this is going to whip on up and get in line. As long as things don't fall apart out of these earnings, we'll see. Another big slew of them coming out this week. I believe tomorrow, actually. Tomorrow after market, maybe there's a bunch. Let's take a look at the DIA. What does the Dow show us? Similar to the S&P. Similar to the S&P. Small consolidation followed by a bullish kick. Let's go look at small caps. IWM. Bob said, I hope we get a nice 5 to 10% pullback. Would give a very nice entry. I'm leaning more towards 3 to 5 and make it a consolidation. Remember, 10's a correction. 10's actually kind of a little gnarly. 10 usually takes a couple of drops. Like it drops, comes up a little, then drops again. So I'm more 3 to 5. That's my camp. IWM mostly bullish. So 3 out of 4 major markets projected bullishly. The only market not is the Qs, the NASDAQ. A little bit of concern, but we don't know anything until we know more about earnings. Right? As we go look here in a second through the watch list and we see our tech lineup, there's still plenty of earnings to come. We got to make sure we respect that. It's January 31st. Where are we in the sector or the cyclical? You can see that from January 27th until about early February 5th, 6th-ish, 7th maybe. What do we expect? We expect a consolidation followed by what? A bullish bounce. Then another consolidation. That one's a little more prolonged. Late February to early March can be a little bit sideways, but then we have, then we have something. I'll show it to you here in just a minute. Then we have a nice bull run late March through April. That's what we expect cyclically. We allowed cyclical. We were off track just a minute, but the rest of the year, cyclical was very helpful. Very, very helpful. So until it proves that it's not, I'm going to continue to look at this and continue to let it weigh in a little bit. Today's heat map, of course, we know the red is communication services, semiconductors, software tech, pretty much across it. What's not? A little bit of aerospace. Look at Boeing trying to come back. Some healthcare. And one financial. Other than that, what are we looking at here? We're looking at a consolidation. Great. Best way to be successful in trading, in my opinion. Find a bull market, buy the dip. It's the title of my book. Find a bull market, buy the dip. We're in a bull market. I found it. What am I waiting to do? Buy the dip. In order to dip, what do I need to see? I need to see some red. Okay, let's get a quiz since we need to get a quiz because we all love a quiz. So we gapped down, sold off, stabilized, stabilized, stabilized. Then we got to the announcement, and everyone's like, "That announcement's not great." Boom, and it sold off. And then it's like, yeah. And then all of a sudden, the press conference, Jerome said, "Good morning, everybody. Good afternoon, everybody." Bam, it shot it up. And then everyone's like, no, that's not what he means. It's this. And it comes back down. And now it's a little bit of a weeble wobble, and now it's going the other way. All right. I'm going to make it hard, I hope. I'm going to use this candle here. Nope, a little lower. I missed it. This candle here, as of right now, we finished above the current candle, in the current candle, below the current candle. The low is 484.15. The high is 485.32. That's $1.15 in that one candle. $1.15. A, B, C. We're light in attendees. I need to have a lot. Everybody who's here, I need you to participate. Everybody. If you're like, I don't really like to do these, Scott, I need you to do it today. The market gods will not be pleased with us if we don't have. John is a C. I am going to go get Stella's answer here. I'm practically pleading with you guys. No one's giving me answers. Everyone's like, he means everybody else. I mean you. You specifically. I'm pointing. If you could see, I'm pointing at you. Just ABC. Put it in the questions. You know you want to. Let's go to the intraday predictions. Now everyone's doing it just to be stubborn. They're like, I'm not going to, Scott. I'm not going to. Here we go. Okay, so Stella says it's going to jump. It's going to get all the way up here. And then it's going to fall. And by the time we get to the close at 2 o'clock, my time, mountain time, the predicted close is 195.19. So it's going to pop out of it and then fall right back into it. 485.15. Boom. That's right there. That's a B. Stella's a B. I think the buyers are going to push it up, like Stella said, but I think it's going to settle closer to 486. I'm an A. That's all I have. I don't have anyone answering today. I'm an A. Stella's a B. John's a C. Somebody's going to win a gold medal. As of right now, it's a solo gold medal. But if you want to hurry and get your answer in, I'm going to let it go. Windows open. ABC, you can still put it in. I'm going to erase this because we're going to go look at the VIX now. Yeah, Ricardo. Ricardo came through. He's an A. Love to see it. Love to see it. Thank you, Ricardo. Okay. John's a C. Everybody else. You made the trading gods shed one tear of sadness, one tear of sorrow for the lack of participation. Bob C did not come through. Oh, man, it did. That's on me. That's my fault. I contributed to that sadness tier. 2 C's, 2 A's, 1 B. Let's go to the VIX. Let's get to the watch list. Let's see what's going on here. What's going on here? What does the VIX tell us? Okay, so the VIX, it's a bit choppy, to be honest. It definitely turned from here. It wavered. It was a strange waver, but it wavered. And now we're continuing. So if you're still in your hedge, you could look at it this way. I don't know. Yes, I think you could look at this and say, if you were bullish, if you had bullish trades on and you saw this and you weren't hedged, I would look at this as a higher low. Regardless of the hedge, I still think that we have the ability for this. I think it could turn over, and if it crosses back below there, all hedges are off. Yeah, John, if you have a good number of bullish, I think it makes sense to put something in place without a doubt. Would I hold on to Apple before earnings? I mean, Apple's been getting smashed. If you were in an Apple trade, hold on, John, let me take a quick look. 5%. What is 5% right now? I'm going to say of 490 still, right? I'm still going off of the most recent high, not necessarily the current. I'll run both. If you're going off the high, I would say 5% of 490.95, 465. If you're going off of 485, which is where we are now, 460. I think I'd go the 460 or the 465. 450 is pretty far out of the money. That's about 8.5% out of the money. So it might be even a little further than I like to be. And I'm fine going out of the money. Okay. Apple. I can't see myself. I mean, if I was trading Apple, the trade was back here. The exit was in these 3 days here, right? It gave 3 days where it's like, hey, we're getting ready to fall. The stochastics crossed. It sent a memo. Attention, everybody. Everybody in a swing trade on Apple. We're getting ready to fall. Tighten your stop. Now it's fallen for 1, 2. It'll be interesting to see, but you can see that it's fallen hard. Implied volatility is up. That implied volatility is going to drop. I bet tomorrow we were at 27. I bet tomorrow we open between 16 and 19. Bam, it drops. That would be my expectation. So that's if you own options, that's going to suck the value out. If you have an iron condor, if you have a credit spread, anything like that, that is Vega negative, it's going to help you, but not for that long. For the long term, I guess it would. If you don't do options, if you just own the stock, yeah. In your long term, you hold through earnings for sure, right? There's nothing here. It's pausing, but it's overall still moving up. I would definitely hold through earnings if I was long term. If I was an investor, something along those lines. Yeah. AIG went a little farther than I was expecting. I wasn't expecting this. I got out through here. It did this, but it's giving it all back. $1.15 to $1.46. That makes sense. Yeah. I'd be okay going to the 460. Wouldn't it be vice versa? The 465 is the one that's $1.46, I would think. Anyway, but yes, I'm fine. Remember, I'm trying to get in there around $1.20 to $1.50 if possible. If I achieve that goal, I got in during a good VIX. The VIX is still under 14, so that's positive. AIG overextended, looking for a pullback. AMD looks magical to me. Looks fantastic. Survived earnings. It's pulling back. Volatility's, look at there. You can see the volatility's dropped out. Still pulling back. Slowing down. I wouldn't like it all the way back to 150, but I would definitely say anywhere between 160 and 170 is a great place to try to find entry into AMD. Amgen needs a pullback. Amazon pulling back. It's got earnings tomorrow. It's one of those that's reporting. AXP, we're waiting for a pullback, but it's strong. I'd trade it when it pulls back. Boeing, I'm not impressed. BK needs to pull back. BLDR, I tried, made a little bit, shut down the rest, out. A little bit of profit. We'll see what industrials do. Industrials was trying to open the window, but it ran into industrials can't pull this thing. It's got to be tech. So if industrial starts running into some lack of momentum and tech is in a consolidation, industrials is going to follow suit, right? So if you're managing trades, be thinking about that. BLK could be setting up if it bounces off the 50, but it's got a kind of a lackluster trend going on right now. It is still above the 50. I like BX better, right? What's the difference? This is still just sort of meandering down, and this can see it was fast, and then it slowed down a little bit, and we busted through that. We got up to here, and now what? Now if it anywhere in this range for me, higher low, buyers smashed and grabbed, back ready to take control. Yeah, I like that. That's fine. City. So I only held 2 trades over this week. City and Meta. Meta I got out of due to the coming earnings. This one I got a little bit extra. A little bonus to get all the way to here. Very nice. Most of it was close. Love it. Love when that happens. Of course, I'm like, oh, I wish I would have held more. Did I have a lot? No, I just had a teeny little piece left. Little piece. Worth it. Caterpillar. Earnings. Hitting some resistance. There's nothing there for us. Oh, look at that. Capital One. The landscape is reshaping in financials. I want things that look like this, right? I think to myself, what a great opportunity anywhere through here to try to catch that. Love it. If it looks like that from financials, it's on my list. COP, nah. Costco, gonna give it a little leeway, but it's trying, and all of a sudden we've got this tweezer hold. I don't love that. If that opens tomorrow down for an early entry, that looked nice, but it may be failing to follow through. We'll see what happens. CrowdStrike, it's on the list. I'm watching this thing. You know, it could pull back. I'm fine with this anywhere through here. Right? Imagine if you were like, I don't know, it kind of pulled back a lot from there. Nah, it was fine. Gave us a great trade. Delta, that's a maybe. Delta was consolidating. It broke out. Consolidation back in place. Then we broke out again. What do we need to do? We need to hold up at a higher low, hopefully somewhere in this range. I'm open to it. Buyers are trying. DHI, not for me. DIA, engulfing. Elanco. You know what? I gave this a shot. I put it on the list. Kind of doesn't move well. I'm getting rid of it. Gone. Fastenal. Oh, Fastenal tried. Now, this might have been anticipatory for some people. I still think it's a valid setup. And if you took an anticipatory, this is what makes it. This is what ugly looks like for anticipatory. If you got in thinking this thing was ready to go, you really should give it at least this much room. So right now you'd be losing money, but not wrong. Losing money, but not wrong. Keep an eye on it. See what we think. Like I said, industrials can't move and be the driver. It's financials and technology have to be there participating as well. And we're not seeing that as of now. GE looking a bit overextended, maybe pulling back. Gold, Google opened low, sold off, down 7.5% almost at this point. HD. So HD. Now HD was one I did not take. I think it was a valid signal. Was I a B? I did choose B. No, I think I went A. What was my concern? My concern is that consumer discretionary is not showing much strength here. A lot of if you look at our bullish sectors, communication services, strong. Financial, strong. Industrials, even pretty strong. Technology, strong. Consumer discretionary, not great. So when you go back and you look at Home Depot, that wasn't enough. So I didn't take it. If you did take it, you'd probably be breaking even or maybe taking a small loss today, saying, I don't think that's going to go. IBM, it didn't hold the gap, but honestly, I'm okay all the way back to here. It gapped up. Now it's pulling back. We'll see. Intel, nothing there yet. IWM, it's fine that it's pulling back. I don't love the big volume. I need to see it hold at or above the 50. At or above the 50. JP Morgan, buyers in control. Sellers looking to come in. Great. Let them do their thing. Pull it back a little bit. Then we pounce. Love it. Meta, influenced by Google. And Microsoft earnings came out. It's pulling back. It's above average volume, but again, I'm comfortable all the way to 383 and the see if this thing retests near the 50. We can be patient for that, but we have to make sure we can sustain until that happens. Netflix pulling back, looks bullish. Nvidia starting to pull back, but looks bullish. Car pulling back, looks bullish. You can see there's a lot of things that are coming out of these new highs. This is happening in technology. This is happening in communication services. This is happening in industrials. This is happening in financials. It's broad-based. You should have at least a couple of candidates from each of those sectors. And yeah, I mean, come on, man. I think it looks great. A lot of things setting up. I don't like PNC as much. I think there's stronger things. Regional banks aren't showing as much strength as bigger things like Citi, like JP Morgan. Those are two primary. Big credit companies, AXP, COF. I like those. I like them. Okay. Okay, where were we? QQQ. Yes, it's pulling back. Pulling back from what? From an extreme new higher high. This looks bullish, plain and simple. Imagine if back here you're like, I don't know. We're pulling back here. Yeah, we pulled back for 2 more days, and then we had an amazing chance to get in, and then another amazing 2 windows that you might have missed. That's what having a bullish posture helps me to make sure I'm looking for the right things at the right time. Earnings came out pretty well. SPY, oh yeah. Oh, we're accelerating into the close. Goodness gracious. Goodness gracious. We tried, and then it's just come back down. There's time. There's time. This thing could 484.15, 485, 40. If it rallies, we're going to be good. We'll see. We'll see. UNP. Oh, I'm trying to jinx it, John. I'm jinxing it. Putting a spell on it. UNP. It's not doing much. Here is the VIX. So for the market to be down 1.5%, this is not bad. We looked at the possibility of the hedges going out 5 weeks in time, approximately 5% out of the money, and we're still sitting in a range of somewhere between $1.20 and $1.50, which that's where I want my hedges to be. I'll tell you right now that if you look at 5% out of the money, 5% 5 weeks out in time, when the VIX is at 25% instead of 14, it's double that. Instead of $1.20 to $1.50, they're $3.20. I mean, it's significantly different. That's why hedging early is so important. Okay, the VIX. This is I spiked up to 15. That's actually false. That didn't happen. If you look, that's back here. There wasn't a time where for this 5-minute period, the VIX went from 14 up to 1535, then came all the way back down, and then just shook it off like nothing happened. If you can see what extreme conditions and volatility can look like. Where's my drawing tools? Huh. It's very interesting. I can't seem to find my drawing tools. Well, all right. I might not be able to draw anymore. Yes, I can. Yes, I can. Let me get my Epic pen out. There we go. Okay. What was I looking at? I forgot. Oh, yes, the volatility. This is not what volatility is going to look like. It's going to look like this. It goes down, and then it moves a little, then down, then shoots up, then comes down. That we don't get 1.35 up and back down in one candle, and then just sort of meander back the rest of the day. That's wrong. So that didn't happen. These here at around 1440, those are our highs as of now. So if I go back to today, there we go. Okay. Yeah, so you can see here, this actually looked like this. So this is a little bit kind of spiking above. This is a little concerning. It's a higher low from there. It is breaking above this prior high here. That's a little concerning, without a doubt. Yeah. But how concerning? Well, when I'm a 6, it's less concerning. Until proven otherwise, I'm expecting a bullish window to set up, develop, and trigger here. That's what I'm looking for. A lot of bullish signals, a lot of strong stocks and strong sectors. That's my expectation. Okay, let's keep looking. Take a breath. That's not fear. That's like a mild concern, like, oh, everything okay? Yeah, everything's fine. Waste management. Bullish. But is it going to give us a trading opportunity? Because it's a grinder, but it is very bullish. Walmart. Looks a little bit overbought, needed consolidation, but boy, I'll tell you what, it sure did recover. It sure did recover. Biotech. Well, for healthcare. Biotech's an offshoot. You can see, looked bullish, failed to launch. More sideways. Hasn't reversed. Certainly not looking as bullish. Look at communication services. It just smashed to new highs. Am I bullish on it? Hell yes. If this consolidation dries up between 74 and 76, beautiful. Absolutely opportunistic. Energy. Energy had a little bit of short-term momentum, and then it's just really subsided here. So, if it pulls back, we'll see. it actually gave a little bit of a false. You can see back here, it popped, it got up, then it pulled back and turned, gave us this, tried to move, and then just fell apart. Okay. Well, let's be careful. Financials, beautiful. Beautiful new high. Waiting for this consolidation. I've got the moving average moving up here. I've got an old high here. Got a lot of areas where this thing could come on back to and find some support and find a nice potential bounce. XLI, is it like way up here at new highs like some of them? No, it got to the old high though. It broke out of this consolidation and it got back up to old highs. That's enough. What do I have? Same thing. I've got this whole range where this pullback could occur, high or low, in line with the trend. Great opportunity. Yeah, looking for it. Looking for it. Services, financials, industrials. That's three. That's three. Boom. Four. Yes, it's pulling back. Actually, less volume than I would have thought. It is going to be above average, but I would have thought way more than that. That's interesting. We'll go see if I overassessed what the SPY was or not. Still looks bullish. Plenty of room for this to still stabilize and still look bullish. XLP just looks stable in a nice, stable uptrend. There's nothing like, oh, there's hardly any interest at all. Back here, we were starting to think, whoa, what's going on with utilities? And the answer is now nothing. We perked our interest for a minute, and then we moved on to the next shiny thing. I would be focusing on other than biotech if I was in healthcare, right? Might be worth a look-see. Do we have a war stock? No, we could pop into those for a minute here. Here's XLY, stable. So what do we have? We've got LMT, Lockheed Martin, not looking great. They got beat up pretty good on their earnings. General Dynamics, they did pretty well on their earnings. They did okay. Lockheed, General Dynamics. Who else do we have? I'm blanking. Let me go look at where are we? Industrials. Here we go. GD, Northrop Grumman and RTX are two others. Northrop, NOC, RTX. Let's go look at those. NOC, they got smashed, recovering. And RTX, they look, so it's kind of mixed bag. I mean, I do agree with you that GD looks the best, but I don't know that the group looks great coming out of their earnings. It looks real split down the middle. So I guess if you're going to do it on the better half, right? Do it on the better half. Yeah. Okay. To the SPY, we're going to call it a little early. We're going to give it to the C's because this thing is just kind of plowing down. So yay for you, C's. Congratulations. A lot of bombs being made. That's true. That's true. Oh, it's interesting that the SPY got more volume on the sell-off than QQQ did, even though QQQ was more the driving factor. So I find that interesting. It doesn't mean much to me yet. I think we'll know more as we get closer to Friday. Does this follow through tomorrow? Does it not? What kind of volume and trading action do we see tomorrow? What do we see out of the VIX? Right now, I'm not like, oh, I'm nervous, it's pulling back. I'm like, giddy up, it's pulling back. A bunch of great-looking stocks are moving into buyable positions. Hoorah! That's my thought. So it's good to see everybody. I enjoyed spending the last day of January with you. I'm looking forward to starting February off right together. We'll have a conversation Friday morning, wax philosophically about all things market related. It should be exciting. Make sure you come with your coffee, with your shining smile and your positive attitude. Have a great rest of your day. Have a great Thursday. See you Friday. As always, happy trading.